Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Man, sorry, I'm like way behind. I had some trouble getting ready this morning, so starting the stream about 15 minutes late. But I think I'm okay. Let's go to the chart really quickly here. So we did just have some news. U.S. initial jobless claims 225K versus an expected 235K. Consumer spending month over month, 0.8 versus an expected 0.8. Personal income 0.7 versus expected 0.4. Not a good thing for our treasuries. PCE price index though 0.3 versus an expected 0.4, and core 0.2 versus an expected 0.3. So that is good. We are getting those signs that overall inflation is declining. And that is probably why the S&P 500 has pushed up a little bit further. Now, I am having a little bit of platform issues here. I think it just has to do with Jigsaw didn't connect to Rhythmic correctly. So let's restart Jigsaw here real quick. That should probably fix the issue. Get that other light on. In some respects, I feel better than yesterday, but I kind of feel a little anemic this morning. I think it's okay though. Here we're missing this action. It looks like the dollar is getting hammered once again. Although the issue that I think we have here is that I see a clear road ahead for the S&P 500 to rally here, barring any kind of data surprise, right? But that doesn't necessarily tell us what the treasuries are going to do. And clear, reconnected successfully. Disconnect. I must have, I think that what happened was I forgot to turn Rhythmic off, and then so when I started it, it was like, oh, Rhythmic is already going though. And so because of that, Jigsaw doesn't seem to be connecting to it correctly. So I'm going to shut everything down here. Okay, now I'm going to start just Jigsaw. Oh, there's a spammer in Discord. Let's get rid of that. There we go. Now, before we load up the NinjaTrader, let's shift over our treasuries here, huh? 2Y December. Gotta, or rather, we're rolling over the micro futures. This is the first day of the month. December. There we go. Well, probably not too much trading from us on the micros because the liquidity is still a little weak. Look at this. Oh, this is funny. There's like no offers in the 5-year. There probably are. I don't see them. Oh wow, the 10-year has dropped all the way to 3.6 now. Wow. Okay. Just gonna wait here a little bit for everything to load up. Okay. So here you see the treasuries after Powell's speech yesterday. Big move up. I mean, in the treasuries, it's only a little skip above where we were. And I am kind of wondering here if the rates should really move all that much. The S&P 500, holy cow, man. Oh, wait, you're not even seeing the charts. You're not even seeing the charts. Okay, treasuries, just kind of a little skip above, but ES, like very clear run here. And if we come over to our daily chart, we are, for the first time since early April, late March, above all of the moving averages. So you're going to see all of the technical analysts trying to do stuff based off of that today. But we got some data, we got some PMIs, and then, you know, there's like job stuff tomorrow, right? So let's not get too hasty making conclusions. Here's oil up as well. Gold and silver are really coming out to new highs and looking quite nice, I must say. And Kappa in there. Bitcoin taking a little bit of a hit here. Wonder, is there some news related to Bitcoin out there? Because Bitcoin seems to be doing something different from everything else. Bitcoin dropping down, or sorry, the dollar is falling here, but what is... Are we getting some sort of a... I don't know, man. I think that there's some crypto news hit. Treasuries do look like they're pushing to the downside. Probably they touched that 114 at least. Are we all okay, you guys there? Okay, I can see we do have viewers. And the stream's all working. I think we're okay. When did this drop in Bitcoin start? Has been maybe the last 10 minutes, so... PCE report notes widespread decreases in prices for durable goods. B2, hey, thank you. I know I started late, so I would expect, people to be filtering in because we started late, but like since I hadn't heard from anybody, I was like, are we actually live? Hmm. There's definitely something going on, don't you think? I'm going to try searching on Reddit. Kraken lays off 30% of staff. I saw that yesterday. Well, I don't see anything on Reddit. Maybe if we hop over here to Twitter. I'm gonna have to filter big time here. Let's say at least 5 likes. Yeah, gold is up, I would expect. So we're kind of in an interesting situation here. It looks like the data is turning south and showing exactly what the Federal Reserve wants to see at exactly the right time, and exactly when many of the analysts kind of predicted that it would. So yeah, I don't think that you can back off of a 50 basis point hike in December, but after that, you know, and frankly, you could probably do January and February too. But this gives them a really good excuse to just hold interest rates in this general area now, right? Well, somebody big probably just cashed out on cryptocurrencies. I don't know what the driver there is. Something happened. They seem to be moving differently from everything else. I guess the treasuries here have been quite volatile uh, since that news came out. Micros here at 3.6 now. We were at 3.7 on the old contract. So, but the liquidity looks pretty rough right now in the 10 years. So, might have to wait a day before we start wading into that one. Overall, though, it does kind of look like the treasuries are maybe leaning towards the downside. It's a little too fuzzy for me to tell. The thing is in the treasuries, I'm not entirely sure which direction the flows are. Momentum wise, we may be leaning towards the long side again. But I look at this and I'm like, are interest rates really going to go to 3.5 though? That one doesn't sound right to me. So from a fundamental perspective, I'm not sure if this rate is correct. Not that the fundamentals move it. But that's kind of all I have to go off of right now, since I'm not really sure what like the CTA and other flows are. I guess it is the first day of the month too, right? So that brings in a little bit of buying. The liquidity is looking okay over here. Hmm. Well, I'm gonna mute myself here so you don't have to hear my breathing through the. You know, when I look at the tape here in the treasuries, it looks like there's a little bit of a battle going on, but it's actually moving on not very much. Even though the resting liquidity looks okay, there's not actually that much absorbing. I'm only just now realizing that the chart that I had up was oil and not ES. So oil is on a pretty good solid uptrend here. You should get some rest to recover from COVID. I don't think it's COVID. I think I had the flu. I also think though that I was getting a cytokine storm. You know what I mean? Like, cause yesterday I was coughing and I was coughing stuff up and I felt like it was coming from within my lungs, but it was just white. So my body must have thought, oh, I have a lung infection, and like totally freaked out. And probably became overly aggressive, hence the fever and all that stuff. I don't know, folks. The treasuries is trending down. I don't like saying that. I don't know. Well, we'll see, but it's trending down in the treasury, especially in the 30-year. So we're getting a bear steepener, huh? Yeah. Now I did start the stream late because I had a little bit of trouble getting ready. Both platform issues and finding food and stuff like that. And I do feel a little anemic this morning, but I'm feeling better now that I'm sitting in front of the markets and talking to you guys. What did Powell say to warrant all that beautiful juice? It's nothing. This is the funny thing. And so we were having a big, long conversation about this in Discord yesterday, and with some people that seem to be skeptics of the order flow view of markets, but the street largely expected Powell to not say too much of anything new in that event, and to generally strike a more dovish tone, essentially, right? So the street largely expected that. So he comes in and he doesn't say anything. That should like already be priced in, right? From your traditional view of markets. But when we look at the order flow view of markets, what that means is that we no longer have any significant impediments to the S&P 500 rallying into the end of the year is what that really means. So I think that you saw all of that flow coming in, trying to front run the positive flows for the end of the year now that the really big risk event is out of the way, is essentially how I read that move. I believe it's impossible to trade crypto by looking at one exchange. Most of the coins split between a 4 to 5 exchange. Tape moves too fast and the book is thin. Well, I think that watching order flow definitely is more difficult when the market is so fragmented. I think that you would probably find, if you were able to get like a unified DOM that showed all of the different exchanges, that you're seeing roughly the same stuff on all of the exchanges. So that's not necessarily going to be a huge deal. I mean, the bigger issue is that the edge that you can get purely from the DOM, I mean, there's a couple of advantages to the DOM, right? For me, with the Jigsaw DOM, the biggest advantage is that everything that I need to look at is right here. So I can see what the resting liquidity is, what the market orders are, and what it is in the correlated markets, all in the same area. And where I click to enter my orders are in the same area. So that's like a big advantage, right? Another advantage with the DOM is that you can try taking advantage of the book itself. For instance, trying to take it as she goes, or rather catching the edge. So hitting into a price just when the liquidity is getting low there and the price is likely to tick up, for instance, right? Now that is a trade that has a lot of competition. So in most mature markets, I mean, I'm not going to say that you can't catch the edge. You certainly can, and trying to catch the edge can really help your overall trading. But if your only edge is trying to catch the edge, you're probably going to be break even at best, right? So in the cryptocurrency market, it seems like they're about the same thing. That catching the edge is kind of a crapshoot. So overall, I guess what I'm saying is that like the really like the high frequency trading type of trades that you would maybe be able to take in Bitcoin are probably already arbitraged out of the markets, right? So then you're kind of in the same situation that the rest of us are, which is that you probably need some sort of predictors of order flow to be able to anticipate what the flows are going to be that day, and then use what you're seeing in the book overall to try and get yourself a good location to try and front run that flow, right? But the issue with Bitcoin is that there aren't as many predictors of order flow. Most of what moves Bitcoin is the large whales and what they're doing, and you might as well flip a coin. They're not very predictable. So for day trading, I do not, you're right that order flow is hard to do in Bitcoin because it's fragmented, but there's so many bigger issues with day trading Bitcoin, right? Which edge? Catching the edge. Do you not know what I'm talking about, NASDAQ killer? I think you do. I just thought you're being funny. No, Lucas is not here. So do you think that heat map might be a better option than the DOM? The DOM you still need... No, so I'm not sure I understand why you're saying that. DOM you still need for execution. At least cumulative volume delta can help to identify abstractions combined with liquidation runs. At least cumulative volume delta can help identify absorption combined with liquidation runs. Okay, so there's not really anything that you can see with the heat map that you can't see on the DOM. Absorption in particular is easier to see on the DOM in my opinion. Now, when it's a thin tick instrument, which is to say that the amount of liquidity that is placed at every price is not very much. Like over here in ES, I'm aggregating every 4 prices, and even then it's only 200 lots per price. So they're really only putting up like 50 lots per price level over there. So it's a lot easier to move price in the S&P 500 than it is in the treasuries, for instance, right? Okay. So then you kind of have to look at it over a range of prices, which kind of makes things a little bit more difficult. But you can totally see the absorption on the DOM. Okay. There's not really anything that you can see on a heat map chart that you can't see on the DOM. Okay. The only nice thing about the heat map is that you can see like the past, so you can kind of remember what was happening back when we were down over here, or whatever the deal is, right? I guess there's a bigger thing here that you have to understand about my approach to markets, right? Is that basically, in order to have success, in order to have a profitable trade, you have to predict the future orders, period. If you made money, it was because you successfully predicted the future orders. You might not be thinking of it from that, within that framework, but in order for you to have made money, basically if you bought something, for you to make money, other people had to buy after you, right? So you are ultimately predicting orders, right? And the general issue is that doing like a history of a single instrument, even when we include all of the order flow stuff, is not very predictive of the future. Okay, so what happens is, okay, people come in, they do retail trading, they say, well, I'm not very informed, I'm not an insider, so I need to rely on the charts to be able to find good trades and try and follow the big guys, or there's some sort of approach like that. Basically classic technical analysis, which would be weak form efficient market hypothesis, right? So weak form efficient market hypothesis says that the markets factor in all past prices, but not necessarily insider information. Okay. Whereas a strong form efficient market hypothesis says that current prices reflect all available information, including private insider information. Okay. So if you have a weak form market, then you should be able to come in and take advantage of trends and this sort of a thing, right? So people come in and they start trading that, or they trade price action, right? And they don't make money. So then the thinking goes, oh, well, that must be because there's not enough information there, which is true. You don't really understand what's happening if you're not watching the order flow, because you have to see all of the orders, and whether or not people were buying with market orders or passive orders, and how all of that trade is taking place. It very much matters as to how it moves. Okay. But here again, the issue is still that past data doesn't really tell you what's going to happen. In other words, looking at the past orders doesn't predict very well what the future orders are going to be. There is a very strong autocorrelation with order sign, okay? Which is, if you see a buy order, you're 0.05% more likely to see another buy order an hour from now, okay? So there is that autocorrelation, but then there's that inverse sine law, right? Which is, okay, so if you're seeing buy, each one of those buys has less and less impact. And then when somebody comes in and does a sell, that sell has more impact. That's why you might find, oh yeah, we're on a really good trend, and then I see somebody sell it, and I'm like, well, they sold it, but that wasn't that much. Certainly not as much as compared to the amount of buying, but then like it completely reverses on that. And you're like, what the heck, right? It's because of the inverse sine law. And there's some reasons if we go into the math about it, about why that happens. Okay. But that is something that you can pull out, right? So basically what it means is that on a risk adjusted basis, you can't just look at which direction the orders are going to know where it's going to go. Because while it does it does seem to, there is some autocorrelation in there. When you're wrong, you're going to be really wrong, right? So you just can't use the past data to predict the future very well, right? But what you can do is this: the current conditions combined with anticipated future flows can predict exactly how something will play out. That's why I say you want some predictor of order flow, right? You either want some sort of predictor of order flow, or you want a statistical inefficiency, right? So like when I talk about a statistical inefficiency, like if you can come in and you can say there's only 50 lots on here, it's very likely to tick down. I can sell into that and get it just as price clears so that I can be short 05, or let's say even better 05 half. Well, I mean, we're trending up, so maybe this is going to be a bad example. Okay, but I could say I'm short 05 half, and now I could stretch if I wanted to, right? That's catching the edge. That's a statistical inefficiency of the market, right? I'm not necessarily so much predicting the future orders. I mean, I guess I am saying that if I do my one lot, there's probably going to be 50 other people that sell it, but it's like on a super, super tiny time frame, right? What did Powell say that was any different from what he said when there was a huge sell-off? Well, okay, so when there was a sell-off, there was some very hawkish language from Powell, don't get me wrong. I think that what's going on here with Powell, sorry, I think I kind of answered, that was all I had to say about Comrade Repeloid's question. So I'm sure that he's probably going to have a follow-up. But do you get what I'm saying? Like the flaw of technical analysis is thinking that on a risk-adjusted basis, the past data predicts the future data well. It doesn't. That doesn't mean that you can't predict the future orders. It's just you need to pull information from beyond the exchange, okay? Anyways, so what I think is going on with Powell, I think first you had two kind of different situations. But basically what I think happened on that FOMC day is all of the robots are reading transcripts of what Powell is saying, and they try to determine, is what Powell said dovish or hawkish? And then if his tone seems more hawkish, they sell it. And if the tone seems more dovish, they buy it. That's basically what's going on. And when you got an FOMC day, you got all of these nervous traders, trigger happy, just waiting to take a trade. And so he says anything that seems remotely hawkish, and they overreact. It's an overreaction function. So again, remember, because the orders move the markets, the current prices don't necessarily reflect all available information. So it could be that Jerome Powell, speaking slightly more hawkishly than expected, is a piece of information that could tell us something about price or where fundamental value should be, right? But that doesn't mean that the way that the market reacts to that is an accurate reflection of what that piece of information actually was, right? So it was probably the case last FOMC meeting that the market overreacted to what he said. I mean, like, you look at me, I come in, I got really got hit on the nose that day, right? Because I thought the whole thing was stupid. But right in that situation, I just didn't have a good handle on what the retail, well, not even the retail, but let's just say that the traders that were trading during that time, how they were going to react to things that he said. They way overreacted compared to what I thought that they would, right? So you consider that last time that Powell spoke, the market reacted extremely negatively, right? So then you have everybody coming in, and they're always going to you know, care too much about the recent. There's going to be recency bias, right? So they look at the last FOMC meeting, saw that there was a big move from it, right? And they go, oh, well, we better be careful about when Powell speaks next time. And this is why there was all of these hedging flows, and the market was kind of a little fidgety before the speech, and slow, and all of this sort of stuff. Even though all of the analysts were like, he's not going to say anything negative, and we think that you buy it. So isn't that crazy that like all of the analysts can come in and say buy? So you'd think that that has to be factored in, but it can't, right? Because what matters is the orders, and the orders were just waiting for his speech to be done, right? 25 base? No, I don't think so. I think that you have to follow through on a 50 basis point hike in December, and that is generally already reflected in rates, that it will be 50 basis points. I think that what they're looking at now is how far does it get after that, right? So let's come in and look at what their pricing, what their current pricing is on rates. Because I'm going to bet that what it comes down to is the expectations that they raise in January or February, March, etc. is probably declining. Fed watch. Okay, so let's look at the December meeting. Oh, okay, that's weird. Why is it gray? Why are these ones gray? Oh, and we need to have compare. Okay. So you can see here that especially compared to a month ago, the probability of them doing a 50 basis point hike, because remember, we're at 3.75 right now, right? So the chance that they get to well, sorry, we're not at we're at 3.5, right? No, 3.75. Yeah, because we usually go on the lower end of the range, right? Okay, so 50 basis points would be 4.25. Okay, so 4.25 is 50 basis points. Then in February, what do we get? 4.25 was what it was before. So they're saying largely they think that it will be a 25 or 50 basis point hike. And in March, they think that it will be another 25 to 50 basis point hike. Okay. But then when we go out to May, I don't know about that, actually, to be honest with you. So when we come over here, if we're going to go to 4.5, how can the 10-year justify being where it is? Well, I guess I have to go way further out. If I go to next December. Oh, okay. Now when you go into next December, then they're saying that there will maybe be decreases. But basically, in order for the current interest rate numbers from a fundamental perspective to make sense, we would have to be reducing interest rates at the latter end of 2023, right? So now, of course, the markets are going to react to how many orders get put in. So you're not actually going to get necessarily an accurate rate. Just like, for instance, there's this hump in the yield curve, right? At the 5-year. You get these humps because of liquidity demands. If you could only get one piece of information from the future, would you agree that knowing what the interest rates will be would be the most important? No, I don't think that that's necessarily true. I mean, if I could only get one piece of information from the future, I would just want to know what is the best performing asset over the next 30 years. That's what I would want to know. And it's probably going to be some unknown stock that we've never heard of before. But I guess the thing I'm saying is, like, if I could only get one piece of information from the future, okay, but what is my goal? Right? So is my goal to, you can't ask for, well, no, but what is the goal? What are you trying to maximize, right? So I'm saying if the goal is capital appreciation over a 30-year period, then I just want to know what the best performing asset is, period, over that 30-year period. You know, so I go to the future 30 years from now, and then I get to grab one piece of information out there. I'm just going to go and say, okay, what was the best performing asset? I guess that maybe you could consider that's like a collection of a bunch of different pieces of information and comparing them to each other and picking one out, but still. Oh, plenty of people care about interest rates, NASDAQ killer. So I'll tell you why the interest rates matter and what makes them so unique that they essentially become the cornerstone of the market. Okay. When I come in here and I look at it and I say the interest rate is 3.15, okay, that number means something. You can come in and you can take a bond and you can say, here is the price of that bond, and here is the coupon on that bond, and therefore this is how much money this bond is worth if you hold it to maturity. Period. Okay, like it's all straight math, right? And then the price that you get on that bond basically just reflects the difference between the coupon on that bond and what the current going interest rates are. Oh, did we just get a little bit of a shift there in the micros? Right. So because interest rates are so you know, mathematical and specific about it, they become the ruler against which everything else gets measured. Man. So we just got Canadian S&P manufacturing PMI 49.6 versus a previous reading of 48.8. I don't know if that's why the treasuries just sold down there so quickly, but that sure was a quick move, wasn't it? The treasuries just moved, or the micro yields just moved like 4 basis points. So that's a little, wow. They just react. No, what he, more often than not, it's the other markets reacting to what happened in the treasury market rather than the other way around. I can understand why you might think otherwise, because they do kind of like move at the same time, and you're going to be prone to think that whatever you're doing is the most important thing because you're the center of the universe. But I'm telling you, most of the time the other markets are reacting to the treasury, not the other way around. Especially in this macro environment. Do you not reset your DOM? I only have less than 100 limit orders in my ES. Oh, so the probably the reason why you're seeing the difference, Gail, is because I'm using tick compression. So if you haven't checked out the latest version of Jigsaw, and I guess that it is still considered a beta it is considered a beta feature, but basically when you come in here to your symbol search, there's this tick multiplier, and I up it to 4. So you see how each price it's only 1. I'm not seeing the quarters. That's why you're seeing that. Well, Lucas never got to the other. You didn't answer the follow-up question, right? Which is like, what are you trying to optimize, right? Perhaps he meant, if I want to make the most money from day trading, I guess. See, the issue is like, if I come in here and I know that 2 years from now, that the interest rate is actually going to be 6%, right? I could certainly make money from that, probably. Yeah. But that doesn't mean that I would make money tomorrow day trading, right? Wouldn't tell me anything about that, right? Neon green, what are you talking about? That's like... Well, they sure are selling it here at the moment. I don't know why rates moved as much as they did. Oh, you know what? We never turned on music. That's funny that I never turned the music on and nobody said anything. Oh man, guys. Hype tracks. We need shuffle. There we go. Yeah, give me them 808s. We are getting comments from Feds Bowman at the moment. I'm wondering, was it something he said? Man, I'm seeing so many people on Twitter this morning talking about TikTok is a threat to security and stuff. I'm pretty sure that if push came to shove, like it was doing during the Trump administration, that they would shift things and have all of the data stored in US servers and not give China any access to it. I don't think that the data on the users is necessarily the most important thing to them. Am I into electronic? Man, do you not? You okay this morning, NASDAQ killer? You having a little like memory problems? Of course, I love electronic music. Pretty much any form of electronic music too. Thought it was electro. Well, what we need to do is we need to talk about. Hold on. Oh, that's the old one. I don't know if there's any good way to really see it anymore. I preferred the older version. That's funny. Okay, so you can go to music.ishkur.com, and this is Ishkur's guide to electronic music. And then you can come in and you can look at all of the different types of electronic dance music. So that is the general genre is called electronic dance music, right? Now, you were saying electro. Electro is one type of electronic dance music, okay? Which would probably be up here, like electro house is probably what people mean when they say electro, right? Having a hard time reading the market today. The movement seems very random. Yeah, well, the thing here is, so here's the problem, I think, is that I think that we're in a situation. Excuse me, hold on a second. I think that we're in a situation where our ability to predict what the orders are going to be over the next month is greater than our ability to predict what the orders are going to be over the next 2 hours. So because we had such a strong run up yesterday, that kind of leaves this gaping hole behind us, and we're also at some pretty key like moving average levels and all of this sort of stuff. Like I was saying at the beginning, you come over here and you look at yes, on daily basis we are above the 200-day moving average. Okay, so basically at a level relative to the average that we haven't seen since August, right? So that's going to lead to all sorts of technical trading to come in, right? There's going to be a lot of people coming in and trying to short the S&P 500 because of what they believe are technicals, right? They believe that the probability is that we reverse here, right? We know better, right? We know that what matters is the future orders. And there's a lot of things that suggest that the future orders are going to be positive, right? So what that means is that at least for today, that it's probably going to be a little choppy and testy, right? Now in the treasuries, I'm not quite sure what's going on there. They moved they've moved at points quite far in situations where I didn't understand why they were moving. Right? I think that well, for one thing, we've been trading a really wide range. Like we went back and forth across this whole range here, like oh man, 1, 2, 3, 4, 5, 6 times or something. Like this is just like a crazy amount of shift, right? And the book in the micros is a little bit sketchy, right? It's not very liquid yet. I think that for me, it's probably better to not, unless I get a really strong predictor unless I get a really good piece of news here, it's probably better for me to not take a trade. You're extra grumpy and crunchy. But here's the thing that I think is interesting is that the spread is still steepening. It's still steepening. So I don't know. One thing I should note is that yesterday we saw a lot of really persistent selling, and later on we found that there was like some sort of an auction going on in the UK. I don't know if anything of the sort is happening today, but it's kind of doing some things that make me think that maybe that is happening. Don't you think? Because so far, I mean, it was really back and forth, but the cumulative delta has been pretty consistently down. Man, the spammers are like really persistent today. So I wonder here, probably if I was going to take a trade, I think that I would prefer to go. Well, okay, so we're going to have some news here. Let's focus on that, right? We're about to get ISM manufacturing PMI, or sorry, S&P manufacturing PMI, 47.7 versus an expected 47.6. So that's not too far off from what they were expecting. So it's going to be the top of the hour that's probably going to matter, right? That ISM PMI is more important because it's more recent. Also, construction spending. Yeah. No, this 8 o'clock news could be important, right? So let's just kind of chill, but the flow is to the downside, so I think that the better trade would be to sell. I don't know if 114 even is the best price that you can get, though. There was last one that we could have gotten was maybe 01. Might already be too late to do anything. That's funny. He didn't the guy that made this song, I'm assuming that he didn't want to have actual voice in there, or he doesn't know how to rap. So he just made a bunch of mumbo jumbo and like did all of this stuff to the sound so that you couldn't really hear it, and you only got like the rhythm out of it, so that it sounded like it was a wave style rap. What the hell is this about? Bad Bunny dominates the global streaming charts across Spotify and Apple Music. And oh, I see. That's a music artist. Oh, this was a track that you guys really liked. Are they just gonna go down to new lows just like that? I think that, you know, for fun, I could have stop limits here. I guess Biden is speaking at the moment. Early indications that we're making progress in combating. So, you know what I think is interesting about the inflation thing? So here's another important thing for us to know, okay? It looks like inflation in services and goods is flattening out, okay? But what I think is likely to dominate the near future now is inflation in compensation, right? Because all of the companies are going to need to start increasing people's pay to catch back up. So how do they sort that all out? That means that the Federal Reserve is going to have to remain diligent, huh? You know, another thing, Jerome Powell, so we should talk about this. I think I want to make a TikTok about this today, maybe. I don't know what I'm gonna do. I feel okay at the moment. Clearly, I'm a little bit stuffed up, but I don't know if it makes sense for me to sit and watch TV all day again. But I want to make a TikTok about this. One of the things that Powell said yesterday was that they you know, the natural rate of unemployment is something that's kind of difficult to pin down where it might actually be. It's kind of theoretical and all these sorts of things. And okay. I'm gonna try doing some market making here, okay? With a sim account, of course. Okay, so anyways, and not only has it changed, but they think that it's basically risen, essentially. So what that means is that if things go south and the Federal Reserve has to reduce interest rates to support the economy, that they probably won't reduce rates as much as people would like. And that they probably keep rates where they are longer, for instance. So that's an important thing to know. That's why I'm kind of looking at these prices here for the micro treasury yield futures, and I'm thinking, well, I'm not so sure that 3.5 would make sense. So what I'm seeing at the moment in the treasuries, by the way, you know, another thing I should note that, because who was it? Chris saying we're having a hard time reading this market. At the moment, the flows don't look too strong to me in the treasuries. At the moment, I think that we're probably being driven by dollar. Dollar is getting creamed right now, man. Actually, that's kind of interesting, though, because dollar going down has generally meant lower interest rates. And right now, this morning, we're at the low end of the range. Well, trying to market make this like this might be a really bad idea because maybe we go all the way back up to the highs. Love that kind of dissonant sub. What happens with Neuralink when the NSA hacks it? Good question. Why is Jack Prosebiak asking that this morning? If we have computers, if we get to the point like, excuse me, I'm still a little bit congested, I guess. If we live in the cyberpunk 2077 future, okay, where basically everybody has become a cyborg to some degree or another, some more than others. That means that the government can hack into our brains and see what we're thinking. And the government could implement like thought crime. Isn't that a little scary? How do they put in safeguards to protect yourself from being hacked and having your inner thoughts? You know, how do you put a barrier in so that your inner thoughts can be kept from the computer chip, but you can still have a neural interface with it? How does that work? CBOE volatility index slips to lowest since August 19th, the last down 0.29 points at 20.29. Yeah, come back when it's below 16. I'm sure everybody will just love that. They won't. It'll be awful. Makes it very difficult to day trade. Okay. Okay, well, I got filled on that one contract, but I'm seeing quite a bit of movement here. Seeing cryptocurrencies recovering their losses here. Gold extending. It's very curious to me that the treasury seems like all over the place. The treasury seems all over the place while almost everything else is just like straight trend. Like oil, gold in particular just seem like nothing but up. The treasury seems to be doing its own thing. Only think about naked women so that their stream gets censored. To protect yourself from the NSA spying on your thoughts when you become a cyborg. Okay. I'm worried that the next technological revolution will be cyborgs, and that I will be like against it. That I'll be, you know, that old angry boomer that decides to not do it and is at a disadvantage because of it. And yeah. That's what I'll be doing. I'll be saying to my grandkids, you put those computer chips in your head, the government's going to listen to your thoughts. You want the government, and they'll be like, well, I don't think about anything that I don't want the government to know. What is wrong with you? Every sane person is concerned about the government becoming authoritarian and hurting them. You're not. You're not. There's something wrong with you. Well, I don't think that I want this other contract if it gets to it. Not only that, but they can probably zap your brain. Oh man. Well, I don't know about that. Like, you would have to be, the chip would have to have stuff built into it to be able to zap you. I don't think that, and with the amount of voltage that's going through a typical computer chip is probably not that. Or the amount of amps that goes through a typical computer chip, it probably wouldn't be able to hurt you. Did you see that whole thing from the guy that invented, I forget what it was that he invented, but he made a new invention that was basically like, if you died in the game, you would die in real life. Like, what the hell, man? Completely it was just like, oh, this guy is insane. Okay. Let's not give him attention anymore. Okay. Like, that's what the media did. This is, you know, you could call me a conspiracy theorist, but the thing that I see that I'm the most conspiracy theory about is that there are certain things that the media is totally okay with being a thing and like freaking people out, and there are other things that they're not, and when you start touching on one of those things that they're not okay with, it just instantly gets quieted. Okay, so the liquidity is pulling for this PMI news. So the headline number we're looking at here is manufacturing PMI expected 49.7. Oh, this is bad. Flat. Okay, 43. Wow. What the hell? That's weird. There's this big offer that keeps popping in. Employment index 48 with spot 4. So all of those numbers seem bad. Well, I didn't need to puke that. I could have pulled it out. This is very, very curious action. So when I look at the 10-year here, the cumulative delta is net sell by about 10,000 contracts net sold there. Even though all of those numbers were very dovish, I think. Manufacturing, let's see here. What was I looking at? Oh, you know what? I think I got some of this wrong. ISM manufacturing PMI 49 versus 49.7. So lower than expected, but not like insane. Prices paid 43 versus 45.9. That's the one that was like way under. Construction spending negative 0.3 versus expected negative 0.2. New orders 47.2 versus 48.5. Yeah, that all doesn't quite make sense. But there was some selling and like strong offers spoofing in here and stuff, which is like really, really bizarre. There's a kind of some. I wonder if this is kind of like what happened yesterday, right? Was there was news and we got a good pop off of it and it was kind of short-lived, right? And somebody just used the opportunity to sell more. Eventually, though, like the UK did its auction and everything, and then after that, the action was different. And then we had Powell, and then of course that was the one they took off. But media's been doing that long before we were born. They are not new to those games. They play on us all. Yeah. So like if somebody is doing if somebody is sharing extremist ideas, racist extremist ideas against a particular minority group, the media shuts that down so quickly. Like, have you noticed that, like, if there's a shooting, if somebody goes and shoots up a synagogue, the media doesn't like to talk about it? Because, and I'll tell you why they don't want to talk about it. It's because they don't want anybody else to be inspired by it, right? I'm pretty sure that's the case, and I would think that is like the sensible, appropriate thing for the media to do in that situation, is to, you know, not say much about the shooter, not share his name, and you know, to ensure that nobody else, you know, tries doing the same thing, essentially, right? And yet there are other situations where they're totally want to make it like a super huge deal, right? If it's not a minority group, then they want to make it a huge deal. Because overall the media wants gun control, right? So there's your conspiracy theories for the day. I don't know why I brought that up. It was bad timing to bring it up too, huh? Man, the 6J really jumped off of that. That was this is some of the most bizarre order flow I've seen in the treasuries in a long time. It actually reminds me a lot of the flows that I saw like in some of my early trading, that it just seemed like really, it was often very confusing. Like that, there's news that was clearly dovish and the market orders was net sell in the 10-year. What's with that? it could be that it was moving so fast that my it's not categorizing that volume correctly. Maybe if Octavius is out there because he has market by order data, I wonder if they use cumulative delta using the market by order data, if his cumulative delta in the 10-year looks any different. But that was just really weird. And there does appear to be significant amounts trading here as well. The 30-year seems to be having a trouble catching a bid. Probably steepening. You made a profit on the 30-year. That's good. Clearly, the spot you want to be in here is the shorter end of the curve today, right? If the 30-year is going to lag. Lucas, I thought you had an interesting question and you never followed up here with what I was bringing up, which was what are you trying to maximize? So like if you could bring one piece of information from the future, what would be the most useful? Oh, I had to go trade. But the most useful to what? What is your end goal? Right? Oh, you had to go trade them. Well, there you go. Okay, well, I did puke. I'm glad I did, even though I probably could have held on and like what do you say? Like I probably could have manually sorted the position out and gotten out at break even instead of just puking it, but that's fine. Better safe than sorry, right? Because that was one that could have just gone and gone. I was only negative 156, so. Octavia says I have negative 9,400 deltas for the print. I don't understand. Got a message that threw me off, so now I can't. What's your question? So your question was, if you could bring back one piece of information from the future, what would it be? It would probably be the interest rates, right? So the question is, number one, what time frame? And number two, to what end? What is the goal that you're trying to achieve? Data supports new Fed stance. S&P selling here now? Market not behaving the way I'm thinking it should at all. I mean, I guess we're okay over here in the treasury, but I don't understand that one at all. Maybe they're just closing the gap. I don't know. That seems like a relatively aggressive sell as well. Yeah, well, it's not new lows in cumulative delta yet, but that's a pretty aggressive sell in the S&P 500. Sorry, lol, to what end and what goal? I guess if I was an investor, that would be a very important, if not the most important piece of information to me, but not for day trading. Well, so for instance, if my goal was just to make the most amount of money possible, right? Then I would probably want to know, and let's limit it to like a 5-year time period or something like that. Then I would want to know what is the lowest price on the S&P 500 in the next 5 years. That's what I would want to know. That makes sense. Like, I think you're right that like you don't agree with maximizing profits, so which I found very curious. Well, yeah, it is kind of interesting. I mean, here's the thing though, is that like the reason why maximizing profits is not necessarily the correct way to go is because of risk, right? But if you know the future, then the only thing that would make sense is to try and maximize profit, right? Because now you don't have any risk. You only get to do it once, I guess, but then there's no risk involved, right? So you can just go and that's, you know, and the thing is that you can't make as much money from the interest rates as other instruments you can, generally speaking, right? So it would be better to like on the day that we have the lows, go and buy leaps or something like that, right? That would be the thing that would probably generate you like the most money. Yeah, but I think you're right though that the interest rate is probably the thing that gives you the best idea of like I mean, let's not say the interest rate, but like the interest rates market in general gives you the best picture of what economists and traders and investors, what the market thinks about the economy and the near future of the economy is the best indication of that, right? Or it's the most pure indication of that. Let's see here. So we got all the way up to 07 at one point. You know, when I started market making on the downside, I'm just kind of realizing that I knew that the news was coming up and I just kind of said that it didn't really matter. And I'm kind of sitting here going like, why would I want to do that then at that point? But, oh well. Either way, I would still be in the same position that I am right now with this long. It was kind of interesting, isn't it? That like, it had such a big spike and now it seems like it's almost going nowhere. It's an interesting take with what I agree with. Have you noticed that, like, the thing that is kind of weird about me compared to the average person is an unnecessary emphasis on nuance, right? Oh, what did you find out on your phone? Oh no. You got me really concerned, man. What he's gonna say. Okay, that wasn't a bad one. You want some nuance, but too much of it will probably paralyze you. Yeah, that's probably true. But you know what though? Like, this is the thing, because when we were having that conversation yesterday, I was mostly going through what I was saying, because there's a bunch of those guys in Discord that don't really watch the stream, and it seems to me, based on what they say, that they don't really understand this stuff, right? Because really what we're doing is we're taking some empirical information that we've learned about markets from these studies, and then we're kind of using that to kind of build our philosophical framework for how we want to try and trade, right? And ooh, ouch. There's a strong sell there. Well, I'm gonna try and hang on, but a good thing this is on a sim account, huh? I don't know, NASDAQ killer. You're right. It's, you know what? I think right now here at this point, actually, I was saying I was gonna try and hold on, but I think I'm not. I think I'm gonna flat. I'm in the 10-year and underwater. Do I wait for the 50 basis point hike in December? I don't think that the 50 basis point hike in December is what's gonna. So you're long and you're underwater. That's interesting. You're asking me a question that I can't answer. So because it's way too specific to you, right? So in order to answer that question, I would need to know a lot more about your risk tolerance, what you're thinking for the trade was, what other assets you have, etc, etc, etc. Like, you're asking an investment advisor question, and I haven't taken the Series 65 test yet, so I probably shouldn't answer that question. But more generally speaking, could interest rates go higher from here? Maybe. I do suspect that the treasury market may have gotten a little bit ahead of itself. Like, when they're eyeing 3.5, I'm kind of like, I don't know about that one. Right? Okay, what on earth is ISM doing in freaking line? Well, so the numbers were definitely all dovish. It seems like there's something else going on. It seems like there's just another piece of news. Like, we got that news flow. That doesn't seem to be the flow that's dominating the action at the moment right now. There's somebody selling it very aggressively. Okay. So anyways, going back to where I was going about. So anyways, we've taken some information that we know about the markets, and we're using that to get a general framework for how we can approach trading, right? And the thing that I love so much about what we've learned about market microstructures is that it really does give you a very clear framework to work from. This is the score. The score, Stream Beats by Harris Heller. So we come in and we take all of our predictors of flows, and then that's our bias, and we're trying to get a good trade in line with that, right? Is the approach to it. And yeah, we can be discretionary about it, but like it allows us to be both discretionary and have very, very clear points at where to give up and stuff. I mean, there's definitely still some places around the edges that seem to matter a lot, aren't there? Like when we catch a runner and we decide to take some profits and it keeps going. That sort of thing can be really, really hard to predict. Is when you can't completely predict the flow, right? But like in this instance, I took a long trade because I thought that the PMIs were pretty weak, and we got a really good jump there. And you know what? I was able to get pretty decent amounts out there of market making, but then big selling there in the flow that contradicts the flow that I'm expecting to see. So that's a very clear signal to just get out. And I guess it's just been sitting there ever since. But that's a very clear message from the market that the flows are not what you're expecting. So I can get out, right? You get what I mean? This framework allows us to have a discretionary system with very clear signals, so you kind of get the best of both a technical and a discretionary system. The downside, the two downsides are, one, you can be wrong, right? Because you're very much making judgments about what certain things mean, and B is that the market doesn't always react the way that it should to things, because the orders can just be iffy. So the things that you're trading off of might not be as reliable as like if you had a technical system. Answer me this: are we well under the Fed rate? What are the chance, odds, percentage guess that we leave before December contract rolls on? That we get that level before the December contract rolls on the 28th. Okay, so first of all, I don't know how to say C. I'm gonna call you C. Is that okay? So first of all, C. I would not be trading the December contract anymore. So, right now, if you are long the December contract, you could possibly be called. And then they would expect you to deliver $1 million worth of treasuries. Okay, so you want to be on March. If you're not on March, you just close that right now and switch, man. And in fact, if you're still long the December contract, I'm absolutely shocked that your broker even allows that. But maybe you're doing a sim account or something like that. I don't know. Yeah, Lucas is like, are you even able to trade December? I mean, some people are able to trade December, but I don't think that there's a single retail futures broker out there that will let you trade the December contract after first call, right? So like normally a future would be like, oh, you think he just means micro 10-year futures, not TN or ZN? That might be the case. You are probably right, actually. I just made a huge assumption there. That was my ADHD mind taking one data point and like taking it way too far. So what are the chances? Okay, so if we say that the Fed rate is going to be 4.25, right? Yeah, so I'm talking about ZN. I was thinking you must be long ZN, right? I guess that wouldn't make much sense because you're saying it should go up to the rate. So really what you're saying is you're long rates with micro 10 years. Okay. So what is the chances that we get to what would be the December Fed rate, which is going to be 4.25, right? Almost zero chance. We would have to have a really big hawkish shift to get back up to 4.25, I think. So the real question is, where are you along from, right? Because while I don't think that we're going to get back to 4.25, I also think that 3.5 is too low. 3.6 is maybe too low. So I guess we'll have to see. I mean, it looks to me, and it's been kind of a weird day this morning, but I think that the overall trend in treasuries is probably that they continue to move up. That's why I'm kind of like 4.11 now. I mean, you might be able to crawl some of it back, but it's very unlikely that that comes back into a winner. In my opinion. That's pretty painful. That's like it's like what, we're 6, if we're at 6. It's like a $500 loss. So ultimately what you got to do is you need to look at your own financial situation and goals, right? So if I was doing investment advising, I would be looking at like, okay, how much income do you make? What other investments do you have? What are your goals with futures trading, etc., etc.? What is your risk tolerance, right? To, you know, come to a decision about how much risk you're willing to put on, right? Because essentially the decision at this point is probably like, I might be able to crawl some of it back, but I could also lose more, right? So is $500 my stop? Then if I'm lost more than $500, then I just take the loss. You get what I mean? Just buy SR3Z27 and go to sleep for the next 5 years. You will be fine. If all you're worried about is getting out at the 4.2% on 10-year yields, you'll be able to get out sometime. He's saying you just hedge yourself, yeah. That might actually work. Because the federal funds rate is probably gonna stay here, huh? Like, it's probably gonna get to 4.25, if not 5%, and then just stay there for a year. That's a more sophisticated trade than I would know how to manage. I feel like we should just hop on Discord. We can get AshK on voice chat, right? And he can run the stream and I can just sit here and take a nap and be sick. Yeah. Put 25K in an account and pray that the 3-month rate doesn't move more than 10% in a quarter. There you go. I mean, the bigger thing here, though, is that but with the inverse ZN to the 10-year, what's the odds that we get close to 4% by the end of December? I don't know. It's really like I was, the difficulty that I have here this morning. You notice that I'm trying to take, because I'm sick, I'm only doing scalps, but I'm not swinging here. I'm not like trying to get something that really runs, because I think that the flows in the S&P 500 until the end of the month are likely to be positive. I'm not entirely sure what those flows end up being in the treasuries. It looks to me like the CTAs are essentially long the treasury contract short rates. And I don't know how much of that money is in or how strong it is. There's definitely somebody selling it here this morning, though, isn't they? Aren't they? I'm not quite sure what's going on. Yesterday there was like this selling until about this time, 8:30, and then it shifted because it was selling from Europe. Because none of that data that we just got suggests lower rates, or sorry, higher rates, and yet the rate is increasing here. It's good for you though, right? Making a little bit. You probably made like $40, $50 back. I don't know, man. I can't give you investment advice, but I think I can give you like general trading advice to the public, all right? And my general thinking is that you really, when you get into a trade, especially with a swing trade, you really need to have a clear idea of how much money you're willing to lose on the trade. And if you don't, what that means is that you're just not you're not there yet, right? There needs to be, maybe you had a good trade idea and maybe it didn't work out, but there's a lot more to your trading that you're missing. And so, I would manage this trade the best that you can, and maybe that just means that you just have to puke the $500. I don't know. But after that, I would only trade sim for a little while until you have you can answer those questions yourself, right? And I didn't say anything about technical analysis. Yeah, so I think what he's saying is he's long micro 10-year from 4.11. So what we're saying here, I can pull up a chart for us to help. Okay. Oops. Your rhythmic is disconnecting on you? That's not good. Oh man, you've been along this for a really long time. Wait, why isn't it doing my whole 90 days? Maybe if I change it to a daily series, maybe? Yeah, I haven't seen any such issues. Oh, what the hell, Rhythmic? Oh, no. I totally did that wrong. 1 day, 730 days. Okay, there we go. And for some reason, it does like it always uses the too big of a candlestick. Okay. So, sometime in November. Oh, so this it still doesn't make sense because you would have been forced to close it, right? So you were already forced to take a loss, essentially, right? So he said 4.11, right? So from right there. Here, we'll do this risk reward sort of a thing. Jeez. How come it's not bar with one apply? It's oh, maybe I want it to be two. Four. What's that mouth noise? I don't know what you're talking about. Maybe you were just hearing me like, oh, in the song, I don't know. Okay, so I'm gonna do something else here. Okay. I'm gonna add the 10-year again, but this time I'm going to do it by month. Okay. There we go. Indicators. And then we want to add our multi-ATR. We'll do it on by ticks. Right. Oops. Didn't attach it to the right. Want it on the monthly. Oh, what? It doesn't like that? Okay, I guess we're doing it on the daily. So like you're getting a daily average change of like 10 basis points on a day sometimes, right? And you need it to come back like 6 basis points, 5 or 6 basis points. So that's a pretty strong That's a pretty strong shift in interest rates to happen before the end of the month. So I'm thinking you probably were just closed out, right? So probably you took the loss and now you're thinking, okay, so do I roll it over to the new contract today and go, you know, long interest rates from here? Right? Will it get back to 4.11 and make up my loss? Probably not. Right? The amount of change that we're likely to get is going to be more narrow. It's probably going to come short of that. Like if we get to 4%, that might be like crazy, right? In December at least. You get what I'm saying? I wish I could show you with a ATR on a monthly basis. I don't know why the indicator doesn't work on a monthly basis. But basically, like, we're trying to look at what is the average volatility during that time to see how realistic it is to move back up to your location. And basically what happened here was that this decline here is like way outside of normal behavior, even for as volatile as we've been this year. Okay, so I don't think you can make that one back. But like the bigger thing is that if you're going to trade, you need to have these sorts of like things in place already. So I wouldn't be taking another position and trying to revenge trade it back yet. You know, I would be switching over to sim and trying to sort out the rest of my strategy. Yeah. I'm going to close that now. They're still kind of chill. Well, they didn't move lower. They're just kind of chilling at 01. The volume is still net sell though, so I don't think... I was thinking maybe we could come in and try market making this again, but I'm gonna say I don't think I can do that. So we all good? Do you feel like you have like a clear direction, you know, the general advice that you can use to make the decisions that you need to specific to you? I would like to sit down and do some market making here, but the volume is not in line with what I want, so I don't think I could do that. I mean, I was doing it a little bit earlier, right? So the reason I'm thinking about it is because we do appear to be in a hole. So like my general thinking, okay, wait. Do we have serious? Okay. I'll do it on experiment, okay? Because I'm really worried that this could fall further. Yeah, a liquidity hole. Yeah. So, oh, it already moved. I looked away and it moved just like that, huh? Well, maybe now I can't do it. So if I see a liquidity hole that there's enough like volume coming out into both sides, then I'm like, okay. Tough day watch. We will trend this after. Yeah, you might be right, Octavius. I am wondering if the selling in the treasuries is coming from Europe. You know, we'll be watching at 9:30, so about 45 minutes from now after we stop the stream. If the flows in the treasury shifts after Europe closes, huh? So we seem to have some sort of a liquidity hole around this location. So I am seeing relatively small resting liquidity on the inside. When it ticks, it shifts quite a bit. So what I would want to be doing is like grabbing some orders from down here. Now the issue is which way do you take it? Well, I think that I should take it long, so I'm going to take it long, but the flows don't seem to agree with me. So this is why this is a irresponsible trade. Okay, but we're doing it to we basically we shouldn't be market making in this location because we're not sure about our directional bias, but I'm doing it to show you the mechanics of it, right? So generally speaking, if we are in a hole, we should be able to pull a full few ticks out of from market making that hole, essentially. I'll do 2 here at 01 so that I can build a position. Because what's annoying is like if you only take 1 tick and then you have to take it a trillion times. So we want to be able to see like the aggregate position over time. So do you see that? There was actually an iceberg there at 01. And we are getting decent amounts of volume that is more than what is resting, right? So when it's low, there's only like 300 contracts on there, right? So that's how I know that, like, okay, they're having a hard time getting below 01, but I stand a good chance at getting a fill there, right? Because the range of this thing is between here and here. You see that? So now that I had the one taken off, I'll leave 1 on to, you know, in case this really moves the direction that I want it to, and I can have a runner. And, you know, I'll put some more orders back down here in case it comes down for me. Now, there is a point at which it's clearly broken out of that range, and then I don't want those there anymore, right? But with the way that this is structured at the moment, we are in a liquidity hole, and we're likely to still be in the liquidity hole at the top of the hour. So that's why it's okay for me to start trying to build the position in that spot, right? I mean, if it trends up and we like breach 05, I'm gonna be super surprised and like, what the hell is going on? Watch it go and do that just to spite me. That makes sense? That's all there is to it. And then I guess, you know, there's some degree of discretion in terms of like how I decide how I get filled and so forth, right? Because I would much prefer to get this. And in this time, I think I really lucked out, right? Because I got filled at 01, and there was an iceberg, so it never went against me. So I really lucked out. Live it? Nah, too risky. See, like the issue with doing this, and I was doing it earlier, and it hurt me. It wasn't too bad. It wasn't too bad, but it was about $300 lost. You know, if this all of a sudden went against me or something, like, look, it wouldn't. Especially if I added these other contracts, right? It wouldn't take much for me to be like really, really underwater. So market making is extremely risky. Well, that's why if I'm doing this, I really want to have something that suggests which direction the flows overall for the session are going to be. You know, like I should be able to come in at the beginning of the day and say the flows are going to be net long today, and then be able to come back and look at my chart and see the cumulative delta and see that it was mostly up, right? If I can't do that, if I don't have a clear enough predictor of order flow to do that, then I don't want to do this sort of thing. And even then, I'm not sure that I would do it live. Like the amount of risk that I'd be taking on in order to do this live, because I don't think that strategy makes so much sense in the micros. We could maybe do something different in the micros. I don't know. I'd have to play around with it. But for me to be doing it over in here, I think I'd probably need like $100,000 portfolio. Because if this falls apart, you're gonna lose like $1,000. I guess if I limit myself to 2 contracts, I did this with 2 contracts. I could do it with a much smaller portfolio. But the issue with the way that I did it here was like, because we only had 2 contracts and I only took the 1 contract off at like +1 tick, it didn't really get very much reward for the risk that I was taking on, right? Like I took 1 tick extra there. If it had fallen below, right, I was thinking about adding it 114. So the risk reward that I'm taking on to do this is super skewed. Why can't you do it in the micros? Do it on CT. There you go. So the reason that I'm a little bit nervous about trying to do that on the micros is because the liquidity is so light. So I could come in here and I could say, okay, here, I'll put some orders in here, but I'll put them in on a sim account. Okay. If I can get the order thing to pop up here. There we go. And I'll put it on my experimental sim account. So we think that rates are going to go lower. So I can put like an offer here. And then if I get filled, we'd be taking it off like here and just take $5 or something, right? I'm the only one on the market. There's not a lot of liquidity in the micro today, is there? This is the way it's been on the day that they shift things, though. So there's a lot of empty prices, huh? So if that fails, then I'm like, I might have to puke like $5, you know? They could squeeze me for 5 ticks. So in the treasury, you can kind of get away with that sort of thing because you can say, well, I'm willing to lose up to $500 on this. And then if it hits that, you just hit the flat button, right? But if you do that on the micro 10-year, you're going to lose more than the $500 or whatever it is that you set aside, right? So that's kind of why I'd be nervous about doing it over here. And furthermore, I have to get filled by market orders. I mean, to do this, I have to be using limit orders essentially, right? Or largely using limit orders. So in the micros, you know, I'm much more likely. How do I put this? A greater percentage of the order flow in the micro is going to be toxic. Over here in the 10-year, there's always a certain amount of volume that's just kind of going back and forth anyways. So I can kind of game out what is the resting liquidity or what is my spot in line and how much volume is actually coming through here on average to make an estimate of how likely I am to get filled. And if they fill me, then, you know, that's just from the normal noise, I should be able to get filled, right? But if I'm doing that over here in the micros, right, the only way that this happens is somebody's really hitting me and picking me off, and they have to be like dead wrong on for whatever reason that they're trying to buy me, right? So you might notice that when I take my live trades with the micros, I'm usually trying to pick someone off. And you'll notice that I make a big deal out of I don't know why I've never like discussed this before. I guess I kind of assumed that you guys knew why I was saying that stuff. But like if I come in here and I sell it at 3.615, right? I want to see of course, that one lot at 615 is going to be gone now, right? And I would prefer to see somebody stack an offer there as well, right? So if I had just taken that and then it ticked up on me, that's like the opposite of what I want to see happen. That's like the market maker or whoever it is that's there, they're willing to take even more than they're showing resting. I don't like that at all. I want to pick them off and then almost immediately see, you things move. Or let's say I take it long now, 3.620. I take that long. Okay, and now we're filled, right? And I could scratch out at 6.2 if I wanted to. That's what I want to catch the edge if I'm doing that, because that essentially means that I picked somebody off. And if they had known what I knew, they probably wouldn't have wanted to have that limit order there, right? There's not enough noise in the micros to get away with what I'm doing over here in the treasury. And that is why the liquidity in the micro 10 years not as much. You know, if there was that overall volume, like the same amount of random volume back and forth in the micro 10 year as there is in the full on treasury, then you would probably see like 1,000 lots on all of these, right? You'd probably see 1,000 lots at every price in the micros. Well, we had a little bit of a jump up, and there does appear to be a little bit of a pause. I wouldn't call it a liquidity hole because the inside bid and offers look pretty good here around 04, half 05. It does appear to me that the 6J is moving here, so I'm not necessarily seeing strong volume come into the 10-year. I'm benefiting from the correlated assets going the right way. It's the same problem I told you a while back. They won't have any tangible volume, at least in my judgment. What do you mean by tangible volume? Yeah, I mean, there would need to be more volume overall, right? Was basically the gist of it. Hey, that one actually worked out really well. It gave me the 5 ticks. You can't get in and out when you want. Yeah. Well, but I'm saying if just the overall volume in the micro 10 was, let's say, 100 times what it is now, right? And there was a lot of random volume going both ways, I think that would probably provide liquidity providers a lot of room to provide liquidity, right? Because given the right circumstances, you end up with an instrument that can potentially hold a lot of liquidity, but can also potentially move quite a bit, right? And so you would want to be over that whole basis, because what I'm doing here is I'm basically saying, I think that I can market make and just catch the random action across this whole 1 basis point range, right? And if you're willing to put orders at every tick across that whole range, right? Yeah, they don't want to come in when your primary hedge on your tick move go out every day. Oh, you know what? I gotta get going today. There would have to be a lot more volume, right? There have to be a lot more volume. I'll see you guys tomorrow. Stay excellent, team.